this series, the Bold Speaker Series 2.0. We brought together today a group of panelists that we believe have some good information to share with you. We understand this is a very trying time for all of us, no matter what industry or business segment that you are in. I know personally as a banker, we are getting a tremendous amount of calls from our clients asking questions about the SBA program. At the same time, they're asking us other questions related to maybe human resources and accounting. And so today we've brought together a panel of experts in those areas. We've brought together a CPA firm, we've brought together an SBA lender, and we've brought together some HR specialists, including a specialist, an HR attorney, and then someone from the staffing and employment side. So we are very excited to provide this information to you. I want to clarify and tell you you're not going to hear everything. Probably today in this short amount of time, there's a lot of questions that are still unanswered, that are still being answered on a daily basis, but we're going to do the best we can to give you what we know today, what we think we know coming forward, and then open it up for some questions and answers. And so without any further ado, let's get started.
All right, so I'm going to close this main room, and then that way we have everybody included that's in the waiting room as well. All right, well, good morning, everyone. Just before we start with our first speaker, I want to let everybody know that you are able to submit questions that you would like to ask that specific panelist that is speaking. And then at the end of the session, everybody can ask questions as a whole through the chat feature. If you're on your phone or if you're on the computer, it's at the bottom of the screen. There's like a little chat symbol there. And if you want to send me a private chat, you can do that. You select within the chat and you choose a Garland chamber. And that way I've received your questions, and I can then, after every panelist presents, I'm able to ask them your question. All right. So we're going to start with Ms. Laura Jones. Let me go ahead and unmute you. All right, good morning, Laura.
Good morning. Welcome to everyone. I'm a commercial lender with Texas Security Bank, and we do a lot of SBA lending. And I just want you to know I see myself really big on my screen, which is a little unnerving. But anyway, I'm just here today to talk to you about a couple of the programs that the SBA has got out for business owners. There's two that I wanted to discuss with you. The first one you've probably heard about, the Economic Injury Disaster Loan, which they're calling the EIDL program. That is a loan that you're going to have to file directly through SBA. It is not a loan that your banker can help you with. So the specifics on it, just so that you have a clue of what they're doing, you got to go to sba.gov//disaster, and it'll walk you through setting up for that. It's a 30-year amortization, 30-year loan at 3.75% fixed. The first 12 months are deferred payments, and then you'll start your amortization period after that. This loan will require a personal guarantee for all owners over 20% and any available collateral with the exception of real estate. To sign up, you'll go online. When you go to their website, they've got forms for you to download. There's an application form, a personal financial statement, schedule of liabilities, tax return or tax transcript application. You'll have to gather that along with your financials. One of the other pieces of information they're going to want is to know what your gross margin is. So that's your revenue less your cost of goods sold. They have some formula at the SBA that they're going to determine based on your gross margin what you are eligible for this loan. It's not something that we can determine for you. I will tell you that the SBA is recommending that whatever they come up with, whatever that number is, if you think it's too much, to just go ahead and accept it. You don't have to take all of the funds at the first. You can defer some of it because you may not need it, but it's easier to go back and ask for the extra funds than it is to go back and try to ask for more. Say, hey, no, I really don't need that much. I'm only going to accept 100,000, and they've approved you for 200,000. It's harder to go back and ask for that second 100,000 after you've already declined it. So go ahead and accept it. Doesn't mean you have to accept the funds. Again, this is done through the SBA, not your bank. The other program that they've got out is called the Payroll Protection Program, or the PPP. That one you will do through your bank. It's a 10-year loan. It's 7 or 10 years, and it's fixed at 4%. This loan is intended to keep all your employees on payroll. So there's no personal guarantee. It's 100% guaranteed by the SBA. No personal guarantee, no pledge of collateral. And there's an SBA application that they're working on. We've got one, but it's the normal one. I'm assuming that they're going to change it up a little bit. And there's a few other things that they're going to ask for, but your banker is going to ask for. But the thing to remember about this one is it also is 12 months of deferred payment. Both programs have the deferred first year. But the eligible amount is going to be determined by you and your accountant. Its eligibility is based on, or the amount you can ask for is 2.5 times your average monthly payroll for 2019 or the last trailing 12 months. And there's some things that you can include. It's like normal wages, salaries, commissions, tips, vacation time. There's some other things that go into that formula. So you'll be allowed to figure that out. Once they give you that loan, within the first 8 weeks, you can apply for loan forgiveness for 3 things. And that would be 8 weeks worth of payroll, rent, mortgage interest, and your utilities. And you'll have to prove that up and send it in, but that debt will be forgiven. There will probably be some residual amount left over, and that residual amount will be amortized over 10 years and deferred for the first year. They're both good programs. There's certain qualifications for both. You have to be an eligible business for an SBA loan, which most are. Even private nonprofits, 501(c)(3)s that are private can also do that. I don't believe at this time that churches are eligible, but that may change. I don't think that's all I really wanted to tell you guys. I don't know. I'm sure there's lots of questions, and I will tell you, as a banker, we don't have the ability to file. The economic injury program is open and ready for you to file. The payroll protection program, while it's still in the forming stages, hopefully we'll have something by the end of this week or the first of next week to start submitting applications for that. At this point, it's our understanding that you can file for both of these loans as long as you do it before June. So my recommendation is, if you think you're going to take one, you can apply for both of them and not accept funds from either, or not accept funds from one or the other. So I think it's a good idea to go ahead and try to apply for both and get the information that you can, and then use it accordingly. That's all I got.
All right, well, remember everyone, you can submit questions if you put them in the chat. I haven't seen any come in yet.
Well, I guess one of the other things I wanted to say is, if you have a good relationship with your banker, go ahead and give them a call and talk to them. Ask them if they file SBA loans. Ask them if, the questions about this. We're all getting information day by day on this. But if you have an existing banking relationship, your bankers should know you. They should have your financials. They should understand your business. They're going to have your personal information on file. It's going to make it a little bit easier for them to process an SBA loan for you if they're an SBA processor. If they're not, we will do that for you, or another bank that's got an SBA lending team. But it's quicker and easier to go with somebody that you already know if they do that for you, because we have to prove up a little bit more information. We don't know you. We don't have your financials. We have to verify who you are and all that information. So it's going to take a little bit longer to go through the process. We would love to help you if we can.
All right, so I have one question. Is there an interest rate associated with the payroll protection program?
Yes, it's a 10-year amortization at 4%.
And just so everybody also knows, Judith Collins, I think she's on this call. She's our SPDC counselor. She works with us at the chamber. She's also able to help businesses if they need help with the process of applying for the SBA loans and things like that as well. So if you guys are wondering if other people can help you, yes, we do have the SPDC counselors that can help. We have another question. What does a payroll protection plan cover?
Well, what's eligible is just payroll, but what it covers is whatever you need it to cover. You have to certify that you're going to use the majority of the funds for your payroll, for your rent and utilities, and then whatever's left over, you can use as your working capital for whatever you need it for.
Okay, another question came in.
There are no early payment fees or penalties for anything.
Okay. It's like, does any program require pledge, no layoffs or furloughs?
You have to be on the EIDL program does not have that. The payroll protection program, there's going to be a feature where you're going to have to be back up to your pre-furloughed number by sometime in June.
Okay. Now, are there costs of contractors considered payroll?
So 1099, it's when the way it states is the salary, wages, commissions, or similar compensation. We take that to mean 1099, but I don't have 100% surety of that at this point. SBA still has to come back to us with their specifics.
All right. So Russell's asking if Texas Security Bank handles SBA microloans.
Well, right now we're handling these two programs.
Okay. So I lost the question. So they are asking if you can take the funds from one or the other once you apply for both.
Yes. So there's some discussion about whether or not you can apply for both. The question is, can you take funds from both? Right now, our thinking is that yes, you can. And there was some discussion that you may be able to roll some of the payroll protection funds, what's left over, into your EIDL loan. We, again, don't have the specifics because the SBA has not fully rolled out the payroll protection program.
Okay. Does the payroll protection, does the business have to meet the same regular SBA lending criteria?
For the most part, yes.
Okay.
Unless they soften those up. I mean, I don't think you're going to have to meet the credit elsewhere. I think everybody's going to not meet the credit elsewhere, which is, I can't get a loan from a bank because I don't have any funds coming in. So I think that meets that criteria.
All right. And then there's another question here. In calculating the 2.5 times payroll amount, is there limits on using high salaried employees in the calculation?
Well, they're eligible. Let's see here. The sum of payments for any compensation on to income or of a sole proprietor or independent contractor that is a wage commission, blah, blah, blah. Hold on. There's not more amounts not over $100,000 in 1 year is prorated of accrued. So there is some, yes. If you go to our bank's website, we have that on there. It's just an information sheet that we've got that's got some information. But if you talk to your accountant, they should also have this information. I say that, and then I'll talk with Frank, and we'll see if that's true.
Yeah. Well, those are. Can you just quickly say what your website is, like where they can go?
It's Texas Security Bank, all of it spelled out, .com. And on the front page, on the landing page, you'll be able to scroll, and it'll there's a coronavirus tag or whatever. I don't know. I'm not IT lingo. So.
All right. Well, thank you, Laura. Those are all the questions I have for you.
Great.
Thank you so much. And if everybody has any more questions, you're welcome to, again, put them in the chat. And if we have time at the end, we can try to get those answered. If not, the panelists are willing to send their contact information to everybody who attended today. And if you have any personal questions, you can ask them as well. All right. Thank you, Laura. I'm going to
Thank you.
All right, Frank, let me find you and unmute you here. Okay. All right. Hi, Frank. How are you?
I am doing well. Good morning, everybody. Well, I gotta be, there we go. All right, now I can see. So I appreciate the opportunity to be here. I'm gonna try to go through very quickly just kind of some things that the IRS is doing and some tax law changes that were added into the CARES Act and what have you that might impact a lot of you both individually and at the business level. These are really intended to be thinking points. You know, everybody's tax situation is different, and but it's certainly things that I think you ought to be thinking about, talking to your professional advisors about, just to make sure that these things are touched. Let's start with just the IRS. The IRS. Oh, okay. I'm with Carr, Riggs and Ingram, and we are a local CPA firm here in Dallas. So let's start with the IRS. So the IRS has unveiled something that they are calling the People First Initiative, and it kind of piggybacks on the July 15th extension for payment and filing of tax returns, but it really focuses on internal IRS actions that are happening and going on right now. For example, the people that have installment agreements that are out there, the IRS has said that the payments that are due between April and July are suspended, so it helps to free up cash flow for those individuals. New installment agreements are certainly still available, and to the extent that you formalize an installment agreement during that window of time, those payments would also be suspended. If you have an offer in compromise or something like that going on, suspending payments for any accepted offer and compromises also go out to that July 15th date. You know, there's an opportunity now for a lot of people, and I know even in my practice, I'm getting phone calls from delinquent tax filers that are wanting to get their tax returns filed because they're going to want to take part in the stimulus payment that's coming up. It's kind of funny, right? They have an initiative to file now. So the IRS is, of course, looking to expedite the filing of those delinquent tax returns and look at that. So field collection activities, liens, levies, that type of stuff, those are all suspended during this period. So the IRS is not going to be initiating any new liens or levies during this time period out to July 15th. And automated liens and levies that are generated just by the automatic systems within the Revenue Service will be suspended as well. During this period, the IRS is generally not going to start any new field offices, field office audits or correspondence audits. And so these will allow the service to pick back up when they can do more face-to-face types of things. In-person meetings, of course, have been suspended. We know that. The IRS, for taxpayers that have earned income credit issues and they're trying to do verification that they qualify, the IRS has extended the time to provide that also to the July 15th timeframe. Now, the IRS is, of course, protecting itself as it pertains to the statute of limitations, and of course is going to continue to take all necessary steps to preserve that. So that's kind of the IRS and kind of what they're doing insofar as how they touch taxpayers. Next, I just kind of want to jump very quickly into some of the highlights of what's happened out here with with the CARES Act and just some of the other things that have come down the line. We'll start with the individual side, and we'll go through that pretty quickly. The big thing out there that everybody's asking about, two big issues, of course, is the loans for businesses, and we've already touched on those. But the individuals are talking about their recovery rebates. You know, the provision is that there's $1,200 recovery rebate, $2,400 for married filing jointly, and then $500 for each dependent child. Now that's contingent on some income limitations and phase outs. They begin at $7,500 for single people. Of course, that's then $150 for joint filers, and they phase out fairly rapidly from that point on. You have to have filed your tax return. Your dependents have to be actual dependents that aren't claimed on another tax return or something like that. And then those rebates are going to be based on your 2018 income tax return. unless, of course, you've already filed your 2019 tax return. Now, there are some people, again, who maybe are delinquent filers that are wanting to get filed to get caught up. You will need to do that if you're going to try to get these. Some people say, well, my 20, because there's income limitations that, as I mentioned, some people say, well, my 18 income was very high, my 19 income is lower, so I want to go off my 19 tax return. So some people are trying to expedite getting those tax returns filed very quickly. You certainly can try to do that. At this stage in the game, though, I frankly don't know how quickly the Revenue Service will be able to process those to be able to modify that. Now, there is a catch-up, there's a true-up that the Revenue Service will do at a later date to determine whether or not you were due more money. But if for some reason they give you too much, right now there's no indication that they're going to ask for that money back. So that's a good thing. Retirement plans, there's a 10% penalty for early withdrawal from IRAs and retirement plans and that type of stuff. And what the CARES Act does is it says that now you can withdraw funds from your IRA or your retirement plan up to $100,000 and not have that 10% penalty. They have to be related to the coronavirus, which basically means that either you, an individual in your family, a spouse, a child, something like that has been diagnosed with the disease, or they have to be the result of, adverse financial conditions due to shelter in place and those types of things, which is going to affect a vast number of people, obviously. And then the Revenue Service basically says that if you take that money out of the plan, you can have a 3-year period to take that tax that's due on that money into and pay that tax. You don't have to do it in a lump sum. So that's a good thing. At this time, there are a lot of people who are very charitable. And we've heard the heartfelt stories about that, and that's a wonderful thing. So the Revenue Service has allowed for the first time that there's a $300 above the line charitable contribution for individuals, which is a big thing. It means it's not subject to having to itemize to get a benefit of that. So if you have somebody that would not otherwise itemize their deductions, they're on a standard deduction, they can still get a $300 charitable contribution deduction on an above the line basis. The other thing is for individuals, typically charitable contributions are limited to 60% of your taxable income. That's been waived for 2020, so that you can basically give as much as you want to give. Corporations, they usually have a 10% of AGI limitation. So a corporate entity can give 10% of its taxable income. That's been increased to 25% for corporate entities, okay? And then for those entities that may be, like we have some that are retail or wholesale food distributors, those contributions of food inventory are normally subject to a 15% of AGI limitation. That's been increased to 25% for 2020 as well, to kind of help those people that want to be charitable and maybe have some food that they want to just, give to a 501c or a food bank or something like that, that would help them in that. Another issue that's gone out there for employers who maybe have employees that have student loan debt, they can give those employees $5,250 to cover those employees' student loan debt. Now, it has to be for a loan that was incurred for education of the employee, and they can make the payments either to the employee or directly to the lender. But this is a tax-free item that these employers can now do to help their employees who may be having some difficulty in this time. That's kind of it on that I have right now on the business front. So on the individual side, let's talk about businesses for a moment, if we can. One of the things that small businesses have out there is something called an employee retention credit. Now, this is not to be confused with the credits that go along with the Family First Act and the Paid Sick Leave Act, which I think one of my other commentators are going to touch on those things when they talk about those things. But there are small business owners can have a credit, a payroll tax credit against employment taxes on an amount equal to 50% of the qualified wages paid to employees who are not working due to the employer's cessation of business, you know, and that type of stuff. The credit is available to be claimed on a quarterly basis and is limited to $10,000 in aggregate employee for all quarters. So because it's 50%, so that's roughly 5,000, right? So the provision does have several other requirements that you would have to look at, but you can certainly talk to your advisors about that and think about that. The one thing that to think of in this regime is how it interplays with like the PPP loan that Laura discussed earlier. So if you take the PPP loan and you get that forgiven because you used it for payroll, you can't also do the employee retention credit. It's kind of one or the other. So there are things that when you talk to your advisors, either dealing, and I know Laura touched on these loans, but dealing with the EIDL loan or with the PPP loan, there are certain other provisions where you're not allowed to double dip. So I just want to put that out there and say, if you're looking at one of those two loans or both of those two loans, which I think Laura mentioned, and I agree, that's a good idea. You need to understand how they interplay with the other parts of the CARES Act as well. And that can get very technical. So you're probably going to want to visit with your advisors about that. Let's move on real quickly and let's talk about another thing that I'm sure the later employee benefits people will talk about it well, and that's the payroll tax deferral. So the IRS has said that you can do a payroll tax deferral during this time to free up cash flow. And basically what that means is it defers the payment of payroll taxes due for the period beginning on the date of the enactment and ending on December 31st. And you can defer all of the payroll taxes due for the employer, not the employee portion, but the employer portion. If you're self-employed, it's 50% of the taxes that would otherwise be due. And then those will become payable again. Half of the total liability of the deferred taxes will be due December 31st, 2021. The remainder will be due December 31st, 2022. So you kind of split that. As you can imagine, the payroll taxes can accumulate very quickly and get to a sizable number. So you split that with half of the taxes due on the December 21st, 2021, and the balance due December 31st, 2022. Ultimately, the employer is still responsible for the paying over what was withheld from the employee, though. That is my understanding at this time. Again, this is another thing that has an interplay with like the PPP loan. And if you have that loan, if you use that loan for payroll and that is then forgiven, my understanding is you can't do the payroll tax deferral. So you need to think about that and look at that. One other thing that affects businesses and maybe affects you now is there's the net operating losses. You remember previously the tax law changed and says that net operating losses could only be carried forward. They could no longer be carried back. So the CARES Act basically takes that away and says that businesses are able to amend and modify those prior tax returns so that NOLs that arose in 2018, 2019, or 2020 can now be carried back, right? And can go all the way back to the 2013 year. So if you have these NOLs that were generated in those years when you only had the option to carry them forward, so you're setting now with unused NOLs, you can now file amended returns and go back and get those taxes back now rather than wait to use that NOL, or potentially, in 2020 may be another bad year due to everything that's going on. So you can go back and amend and do those at this point in time. So that's a big thing. That kind of plays into what happens. There's something called the excess business loss limitation that when you have a pass-through entity like a partnership or an S corporation, or even if you're a sole proprietor and you file a Schedule C and these losses offload to your personal tax return. So the bill also eliminates the loss limitation rules applicable to sole proprietors and pass-through people and allows them to take advantage of these NOL carryback types of things as well. And so then we get into, for corporations, we have the alternative minimum tax credits. Now the A&T was eliminated, but where corporate entities had A&T carryovers, they were able to claim a refundable portion for that unused minimum tax credit, and that was going to go out through 2021. So the amount of the refundable credit was limited to 50% of the excess minimum tax in 18 through 20, then being fully refundable in 21. Well, they have accelerated that and said that the refundable credit can be claimed on 2019 and allows corporations to elect to claim it fully refundable, even in, in the 19 and 8, on the 18 return actually, and then the 19 return, you can do that as well. So, so that's something that you might look at, visit with your preparer about. One of the things that affects large businesses is something called the business interest expense limitation. And I'm sure if you're a large business, you've heard about that. For 2020, that definition is 26 million of income, right? Taxpayers whose average annual gross receipts over a prior 3-year period is in excess of 26 million have this business interest limitation. Well, the Revenue Service and Congress looked at this and said, well, with these loans that are potentially coming and that type of stuff, it is potential that this interest is going to be a bigger issue. So now, where that was previously the taxpayer was limited to 30%. Now that increased the limitation amount to 50% of the taxpayer's adjusted taxable income for 19 and 20. So you can do that on your 19 return and on your 20 return. Now, if you've already filed your 19 return and you had this limitation, it will require that you amend your 19 return for that. A big one that has come out is there was something that was called the retail glitch or the real estate glitch that came out in the prior tax act as it dealt with qualified leasehold improvement property. Everybody knew that in the drafting of the bill as it was coming out, that Congress's intent was to allow for what was known as retail improvement property, restaurant property, qualified leasehold improvement property. They did away with those 3 categories and basically rolled it all into one. And their intent was to have that be a 15-year depreciable property. Thus, it would qualify for a 100% bonus, which we have in the tax regulations right now. However, when the bill was finally drafted, it didn't make it into the bill. And everybody knew it was a problem, and we've been asking for technical corrections on that because it's not really fair when we all know the intent of the committee reports and everything was to give us this. Well, they've now put that in the law, and they've said that this property now qualifies as 15-year property, which means it qualifies for a 100% bonus. And this is back to the date of the enactment of the original law. So this means that you, again, are probably looking at some amended tax returns to take advantage of this. But your restaurant people, your retail shops that have this type of property that were forced to a 39-year depreciable life can now change that and get the benefit of this 15-year depreciable life and hence get 100% bonus, which means you can write it off in the year that you put it into service. So that's a big win for taxpayers, especially in those market segments. So you might look at that, businesses that have made improvements in the past couple of years that were impacted by this, it could really generate some substantial losses. And the good thing about it is again, with the NOL changes, you're going to get the benefit of those losses. So it's definitely something that we're going to want to consider, that we're going to want to look at. So let's see, I think that.
I have a couple of questions for you if you're ready.
Oh yeah, sure. What do we got?
All right, so the first one, this is on the IRS tax, the first part of your presentation, and it's, will all the suspended payments be due at once, or do they have it, or will the term be extended?
My understanding is the term gets extended. That's the way I read it. I haven't seen that there's been anything that says that there's a catch up there.
All right, then the following questions are all on the CARES Act that you covered.
Okay.
So do we have filed for this year before we receive the stimulus check?
No, So what happens is they base it off your 18 tax return unless your 19 tax return is filed. And then if when your 19 tax return gets filed, you know, if the stimulus works out to where you get, because the stimulus payments really is an advance credit, right? So if when we file a later tax return is determined that you would do more, then you could potentially get a little more. But if you were due less, well, you don't have to pay it back. But they will base it off your 18 return unless your 19 tax return is filed. Now, again, there are some people that potentially want to get that 19 tax return filed, and certainly you should try to do that if your 19 income is going to put you below the threshold, whereas your 18 tax return had you above the threshold. But again, at this stage, I really don't know how quickly the Revenue Service is going to process those just to know if they're going to be able to do that.
Are the income limitations based on the W-2 wages or net profit from the tax return?
It's adjusted gross income. Right.
All right. What is an above the line deduction?
Above the line deduction means that it's basically you get it on page, well, with the tax form changes, basically you get it to take it in your computation of adjusted gross income, which means that it is a deduction. You add all your income items and then you take the deduction to arrive at AGI, which then from AGI, you either take your itemized deductions or your standard deduction, right? Well, most of the time in all of your, when you're dealing with charitable contributions, they all go on an itemized deduction form, Schedule A. So it's below that line. But in this particular year, we were able to take that above the line. So even though you don't itemize, you still can claim that particular charitable contribution.
Okay. All right. If your income is above 150,000, for example, and your spouse has no income, but yet you filed jointly, do you still qualify for the stimulus?
No, because it's married filing jointly. It's considered a joint return, and so if your income is above the limit, you're the sole. You still are not qualified.
Okay. If taxpayer is on installment plan with IRS or is delinquent with IRS, will they still get the stimulus payment? Or can they benefit from a new carryback rule?
Well, if you're on an installment agreement, that doesn't prohibit you from getting the stimulus payment. If you're delinquent with the Revenue Service, again, they're basing it off your 18 tax return. So there is a motivation for you to get caught up. Now, when you get caught up, it is possible, I'm not really sure that when you catch up that you would get that stimulus at a later date. I would think you probably would, but I don't know that for 100% because quite frankly, I just haven't looked at it. But there is certainly a motivation for you to file and get caught up. In my own practice, I had a number of clients call me this week that, they haven't filed in a couple of years for whatever reasons. Everybody has their reasons. But those calls came in and said, hey, I need to get my tax return filed and I need it filed now, So there's certainly a motivation to do that if you are delinquent.
All right, and the last question that I have, can I enter my bank routing information with the IRS even though my tax refund from last year was done via check?
Well, I know the Revenue Service has said that they're going to issue the stimulus payments via the bank routing number. I don't know if there's a way to do that, frankly, off the top of my head. If you will, whoever asked that question, you'll get my email contact. If you'll email me that, I'll certainly get an answer for you.
All right. Well, thank you, everybody. Thank you for all the questions. Thank you, Frank. We're going to move on, and Frank, I'm going to mute you. Thank you. And Randy, we're going to have you unmuted here. If I can find you. Oh, there you are.
Hello, everyone. Thanks for allowing me to talk today. My name is Randy Lokey. I'm an audit partner with CRI. I get the joy of working with Frank every day. You got to hear there a little bit. I've probably got as an auditor, I've probably got a unique perspective on things. Maybe my, discussion here is going to be a little bit different, but As auditors, really what we do is we provide certain levels of comfort on a company's financial statements, be it if we're doing audits, reviews, compilations. In this current financial, this current climate, financials, I feel like are going to be more scrutinized than ever. Companies are going to have probably more users of their financials than they've had before, and those users are going to be more skeptical of the financial statements. And when I talk about really users and in kind of my space, my world is, I'm really talking about owners of companies, lenders to companies, investors, analysts, and in some situations, even customers and vendors. I do have clients that in certain situations do provide their financial statements to their larger customers, larger vendors at their request. And obviously at this point, I know companies have immediate cash flow needs, which is really probably the most critical thing that, owners are thinking about at this point. And what most of our panelists today are really going to try to address is ways to help lessen or alleviate those cash flow needs. What I wanted to do is really speak for a few minutes from kind of a financial user perspective again, really on two things. Is just to kind of highlight some concerns for companies and users of financials. If just probably, bullet point a few ideas of things that both from talking to my current client base and just questions I'm getting and both from companies, clients, and users of financial statements. And I wanted to then talk about the impact of financial statements that I think everyone should certainly be aware of. And I'll probably mention this again later, but I think a lot of this is because I think these things are the type of things you want to be having discussions with your bankers for sure, and your CPA to just make sure these things are addressed if these things impact you. So, just going through some concerns for companies and users at this point. I mean, and some of this may apply more depending on the industry you're in, but certainly companies are going to be concerned about changes in demand for their products and their services. Changes in the level of staffing, the availability of their staffing at this point. Changes in the credit risk of their customer base is something they should be concerned about. There's obviously going to be pressure to make changes to customer and vendor payment terms. I know I've already heard that from current clients that their customers, and I've had this for myself with my own customer or my clients, as asking for certain concessions or delayed payment terms. Changes in availability of goods and services is something companies are certainly going to have to think about. The impact of any travel or transportation restrictions, both on their employees and on their goods if they're an importer, or just depending on even what area domestically that they're doing their production. Is there going to be any restrictions that are going to impact that? Reduction, relocation, or even discontinuance of operations is obviously things that I think companies are going to be having to think about a lot at this point. Again, depending on maybe the type of company, you've got volatility of pricing to think about, be it if it's, stocks, if the company's got a lot of investments, if they're dealing in, I've got a few clients that in the commodity space, well, obviously they're concerned about commodities at this point. And foreign currency concerns. Other concerns would be, there's going to be pressures on with leases and lease modifications, possibly. The companies I feel like are going to be reassessing their leasing needs. I haven't gone through this, and just the ability to work remotely and virtually now may cause companies to reconsider their leasing needs. Increased risk of concentrations. If you're a company that's got concentrations in certain industries, certainly in the hospitality, restaurant industry at this point, you've got certainly a lot of increased risk with that. And then for at least my banker friends on the call today, potential loan covenant violations and what some of these changes may mean if there's potentially going to be covenant violations or under a worst case, maybe loan defaults or the need for amendments or waivers. I know I've already had a few clients reaching out to their banks regarding some anticipated busted covenants coming up over the next year. If they're dealing with any projections or forecasts, certainly at this point, if they had a forecast or projection, and if it's probably more than a week old, they probably need to rework it and look through and think about what that projection looks like at this point. And then something that's real more, I'm experiencing right now is just delayed timing for the work we do as a CPA firm or as an audit firm. We've got audits, reviews, and compilations, and now most of our clients are working remotely. We're working remotely, so just the timing of getting things done and completing things, and the timing of issuance of reports. I've got some concerns now about meeting deadlines, and I know some of my clients have concerns about meeting deadlines at this point. And then the last couple of things, I've got impact on financial statements, which I'll walk through in just a second, and really other impacts on audit reviews and compilations. And when I say kind of the impact on financial statements, really I feel like I could kind of group those into two things. There's really specific accounting type impacts or numbers impacts if we're doing, and when I talk about financials, I am meaning the company is really presenting, most GAAP financial statements, so financials under generally accepted accounting principles. I realize there might be financials presented under other bases, but most of what we do deal directly with GAAP basis financial statements. But I just want to talk about some specific issues with those, and then some other kind of more broad impacts to things like that. Some of the accounting impacts at financial statements that we're going to be seeing right now, and certainly going to be seeing as we work through these new times, is there's going to be potential increases needed for allowance for bad debts on a company's financial statements. There's going to be potential write-downs of inventory possible. There's going to be potential impairment losses for things like fixed assets, or if they've got goodwill and intangibles on their financial statements. It's going to be very likely, and these are the things that we're talking to our clients about and concerns that are on our radar as auditors. That certainly, or they're always concerns, but now they're just really amped up because of the current environment. But impairment losses like that, potential recognition of loss contingencies, another area, if the company has deferred tax assets on their books, certainly the potential valuation allowance or need to reduce those if they're not going to realize those tax assets. There's potential needed for reclass of certain long-term debt to current debt. And previously, where I talked about there could be loan covenant violations or loans in default. In our world, when we see things like that, typically you'll have long-term debt that under the accounting standards has to be reclassed and all shown as current, which then just kind of makes the problem even worse at that point. There's potential presentation of discontinued operations. If a company has, discontinued segments of their business, then there's an accounting impact for that. And those are kind of all what I call the specific, numbers type impact. And then there's few other things I wanted to go over just that are more kind of broad level, I'll call them more, disclosure kind of things. Do not necessarily impact the numbers, but certainly impact the financial statements. The biggest of which in my space is really report modifications from all this. All these previous things I talked about could lead to us having modifications in our audit opinions for going concern uncertainties. If there's some doubt about the company's ability to be able to continue, GAAP departures, if a company's not following GAAP, or maybe something an allowance needs to be recorded, the company's electing not to do that. This is one I'm actually experiencing a little bit right now, is scope limitations on audits from the inability of us to complete our procedures. The best example that I've got some clients right now with March and April year ends with inventories, and we're not able to get out to the location to count inventory. So we're, working through options with our clients, but, depending on where we get with that, there's a possibility we'll have to do scope limitations in our audit opinions about not being able to observe inventories, which is a required audit procedure. Then in kind of under a worst case scenario would be a disclaimer of opinion if we get, if we're just not able to complete our audit, which hopefully we won't have any of that, and we'll be able to work through various workarounds, but just wanted to point that out as a possibility. And some other disclosure type items that I think will certainly, users of financials could, probably will expect to be seeing over the next year as we navigate this, is inclusion of liquidity disclosures in financial statements. Of just really a discussion that talks about, where the how the company's going to fund its operations if it's not clear from the financial statements. Inclusion of subsequent event disclosures. I know we're talking to our clients now about, a lot of financials are being issued right now, or December 2019 financial statements. We're recommending them add certainly some disclosures about any potential impact all of this may have on the business. Disclosures in connection with risk and uncertainties, potential delays. I've kind of mentioned this earlier, but there's potential delays in completion of procedures, which is not necessarily a disclosure item, but again, an impact to our work that we're doing. And if you are presenting financial statements, certainly audited, reviewed, or compiled financial statements to your bank, there is potential that there's going to be some delays in getting those done. And then I guess the most critical thing, and just thinking through all this from my perspective at this point, is to just for companies out there to be talking with their banker, talking with their CPA about kind of next steps, and thinking about how all of this is going to affect the company, how it's going to affect the financial statements, and what impact that may have to any users of the financial statements. And that's really all I've got.
All right, thank you, Randy. I don't have any questions for you so far.
No questions for the auditor. Surprise.
No questions yet, but we'll move on to Monica, and if anybody has a question for Randy, we'll have some time at the end to ask you.
Okay.
Thank you, Randy.
You're welcome.
Go ahead and mute you. All right. Let's see. There you are. Monica, I think you're live now.
Good morning. So I'm Monica Narvaez, and I am a labor and employment attorney with Estes, Thorne, and Carr, which is a law firm in Dallas. But we practice all over the country. I'm actually also licensed in Ohio. So I'm going to keep this short as possible so we can get to questions. And partly that's because the lawyers always say, oh, it depends. So there really are no fast and quick answers here. To sum up everything, though, that Randy and Frank said, I think that I wanted to follow them, and that was for a reason. There's a lot of moving parts going on right now, and there's a lot of regulations that are not completely out. And a lot of the things that Frank and Randy and Laura discussed are really going to drive how employers move forward. Now, there are some initial concerns of things like layoffs versus furloughs and things like that for the immediate term. But I think that one of the big things that I want everybody to take away from this morning is that this is going to be a long-term strategy. And in order to come up with your long-term strategy, you're going to have to figure out what laws, what loans are out there, what tax breaks are out there, what you can avail yourself of in order to keep the business going. And then once you figured out what you can do to keep your business going, then you need to come up with a plan of what employees are you going to keep, what employees do you maybe need to not keep, and what employees do you need to recall, and then how do all the employment laws play into that. So I think that a lot of what's happening right now is the first 2 weeks, there was a lot of people laying off and furloughing employees to save payroll. Some employers were doing it to avoid the application of the Families First Act and the CARES Act. We have a little bit more guidance on that now. And those were all very good decisions. But I think that right now we're in this wait and see, and we've got some time. The Department of Labor, with all of these acts that have come out, they have actually stated that everybody has until about April 17th, that's the initial date, to get into compliance with the sick leave and the FMLA and all of the new provisions that are out there. So you have a little bit of time before the government's going to come calling. And it's worth it to take a step back and look at what you're doing and the things that are out there so that you don't have any claims of discrimination or harassment. I am getting questions from clients that are things like, what if I don't offer sick leave? Am I going to get a lawsuit? And you could. Did you have a good faith belief that you needed to offer sick leave or not offer sick leave? Things of that nature. One thing I will say, and I probably should have said this from the beginning, the new laws, the employment laws, technically go into effect tomorrow. So one thing that people need to be telling their clients, or if you are an employer, get your posters up in facilities. You put them by the normal DOL and Texas Workforce Commission posters, put them up there, or email them if you've got people working from home. I would probably do both. So those need to go out to let everybody know what the new laws are. And that's kind of like an immediate thing. And then after that is when the planning begins. If you are still going to be going forward with furloughs and layoffs, there are things to consider, such as with a furlough, you have to continue to pay sick leave. How long does that happen? You need to talk to your benefits provider, meaning your insurance carrier. Other things are, if you're laying off a large amount of people, do you need to comply with the WARN Act? There isn't definitive guidance out there yet as far as whether that's going to apply, because this is a pandemic. It might, but we don't know. And things like, let's see, if you're going to do a pay reduction, and employees start complaining, you need to make sure that they're allowed to express their Section 7 rights under the National Labor Relations Act. They're allowed to complain about the terms and conditions of employment. Now, you don't have to give them free rein to, tank the business and start disparaging everybody and cussing and being disruptive. But you can't just fire them because they said that you employers stink because you cut my pay. So this is a lot to throw out there. There's a lot more. I wanted to just get people to start thinking of that there's definitely more to this analysis than do I just need to furlough or lay off? Because you might be fixing one short-term problem, but then a whole bunch pop up. So I think I'll just leave it at that as far as the big things, and see if there's any questions.
All right. Well, I don't have any questions yet. Oh, what? Never mind. I just got one. If you're an essential business and operating during the shelter-in-place order, and an employee is opting to shelter in place and not report to work, do they qualify for the 80 hours of emergency paid sick leave?
The Department of Labor is supposed to release their final regulations. It said before April 1, so that would be today. I guess technically that'd be up until 11:59. Right now, their guidance is that if an employee is at home because of a shelter in place, that is not something that would qualify for sick leave, because they're not at the workplace because of the coronavirus. So right now, no, we're going to see what the Department of Labor says on that, if they would be eligible. But as of right now, the shelter in place doesn't, it comes down to what are the reasons why they can take leave.
All right. We've received another question. Can you clarify the difference between layoff and furlough?
Yeah, a layoff is, it has the same effect to the payroll. However, a layoff is actually removing people from your payroll. You're actually letting them go and they are no longer an employee. A furlough is not paying them, but keeping them on the payroll. With that comes then some health. If you have health insurance benefits, there are some continuation. They get to keep getting health insurance. But the benefit of a furlough versus a layoff in this type of a situation, in my opinion, is that you can rapidly bring people back to work. And you don't have to go through the new hire processes, especially with immigration. And I'm not going to really touch on that because immigration right now is sort of at a standstill. you know, you'd have to do all the new hire things if you laid them off and brought them back, whereas a furlough, you can just recall. So the effect is essentially the same, but the immediacy of getting your staff back up to speed is better with the furlough. I think that's going to be important under the Section 7 loans that are the SBA loans that are coming out with the forgiveness, because there is a requirement in there that you rehire or recall people so that you can have the same number of staff on your table of organization so that you don't get the loan reduced, the forgivable amount reduced. So a furlough would make that easier.
All right. Well, I don't have any other questions as of right now, but people are welcome to submit questions, and if we have time at the end, we'll have those answered. Thank you, Monica.
Thank you.
All right, I'm going to mute Monica, and we'll have Lisa Locke next. All right. Hi, Lisa.
Hi. Good morning. Good morning, everybody. My name is Lisa Locke. I'm with Human Resource Solutions, and I'm going to talk to you some things about the Family First Coronavirus Response Act, as well as some benefits and unemployment. As we mentioned, everything is just changing daily, and we're getting more guidance daily. So what may have been vague last week, we might have more clarification. The first thing I'm going to talk about is we'll call it the FFCRA, is the Family First Coronavirus Act, which Monica mentioned. It does become effective on April 1st, and it's for employers with 500 or less employees. Some guidance came across over the weekend that defines a couple of situations where companies are exempt from this act. And the two types of companies that could be exempt are healthcare providers. There's a better definition of a healthcare provider. Typically under the FMLA, the healthcare provider is going to be someone that's taking care of a patient. Under this definition, it's expanded because healthcare providers can be exempt from the FFCRA, and that includes doctors, nurses, expanded to include nursing homes, assisted living. If you're working at a educational program that involves medical treatment, those are now excluded. So any type of healthcare provider, it's a rather detailed list, but it does define what a healthcare provider is, and then if you fall into that category, you can be exempt from applying the FFCRA Act. The other definition we were waiting on is a definition for small businesses. And for small businesses, if you have less than 50 employees, you may be able to file an exemption for your small business. The guidelines on the small business, if you want to file an exemption, would be that by applying these paid leaves and the expanded FMLA definitions, it's going to result in your small business to cease operating even at a minimum capacity. So that's one of the qualifications. The other is that if complying with this act, if it's going to create an absence of employees that are important and vital to your business, that could be a reason that it would create a business hardship. Or if there's just not enough employees that are going to be qualified to work to come into your business. So there's 3 reasons that you could qualify for an exemption if you're a small business with less than 50 employees, and there is no paperwork that you need to file with the Department of Labor. You just need to document what your reasons are so that you have good documentation on why you felt like you fell under those exemptions. There's quite a bit on the coronavirus legislation. Just high level, there's 2 types of leave that came out of that. One was an emergency paid leave, which offers 10 days of leave. The amount varies depending on if you're on paid leave because of your illness, or you're required to be quarantined or isolated, or if it falls under your child or somebody in your house that maybe is experiencing symptoms. So there are 2 different qualifications or reasons there, and based on that reason depends on how much that they would receive in pay during this 10-day paid leave. The main guideline is that it would be their regular wages, and that does include any expected overtime. But there are also up to some guidelines up to, if it's your own illness, it's up to $511 a day. If it's for a reason that you're taking time out because of a family member or a child, it's up to $200 a day. The other expansion or the other paid leave on this act was the FMLA expansion, which that does it's added a definition basically to the act. And that is where you need to have time off where your school, the child's school has been closed, or you don't have a daycare provider for your child. And that gives an additional 10 weeks of paid leave up to the maximum of $10,000. So there is some more guidelines, and they're tweaking those guidelines almost daily. So it is something to keep up with as well. The thing is, a couple of things is that, just documentation is always good. Document, and then also if an employee, you can't make your employees use any of their current like PTO time, vacation time, sick time for this leave. This leave is separate from that. They can if they would like to, but it's not something that you can require them to do on that. A little bit into the tax information on this is that the tax information, if you are paying out that paid sick leave or the expanded FMLA definition, there is some credits that you would receive. Employers, you're reimbursed 100%, and it's offset, dollar for dollar, offset your tax withholdings and payments. If you don't have enough money to pay that paid leave, then there is a way that you can immediately get a reimbursement for that unreimbursed leave pay. They just have not come up with a process for that yet. My recommendations on that would be to, again, document, track the time that your employees are using. You might set up some codes in your payroll system, one, under what would be paid leave under the FFCRA, and one would be the family medical leave under the FFCRA, so that you can track that time in case you need that documentation later on how much that you have paid out in regards to any of these two acts. The next section, just to touch a little bit more on what Monica had suggested, if you have employees that are going out on a leave of absence or that are on a furlough, check your benefit plan documents and contact your broker. You want to make sure that you are complying with the guidelines in your benefit plan documents on how long you can continue benefit coverage for an employee that is not at work, either on a furlough or leave of absence. If you have more than 50 employees, as you're working through some of those issues, there are some ACA compliance issues that you need to think about depending how you do a furlough or a layoff. And then you also want to think about, make sure if you are laying off your employees, make sure you're offering COBRA, or if you're a smaller employer, that you're offering state continuation coverage there. Also think about the retirement plans. If you offer a 401k, what are the ability for your employees to get a loan, a hardship distribution? If you're laying off employees, then what are the abilities? Can you make changes if the employee has to continue to make loan payments? You might need to look at the plan document to see if that loan has to be paid immediately, or can they continue to make loan payments on a regular basis. The last thing I had is just a couple notes on unemployment I'll run through real quick. On the unemployment, with the stimulus package, employees that file for unemployment, they do receive an additional $600 on the unemployment, and it's up to 4 months that they're receiving that pay. A couple of waivers. The 1 week waiting period that typically is required for unemployment has been waived. Also, the work search requirements, where the unemployment's requiring you to go out and search for work, that requirement has been waived. And then one of the big changes that came through with the stimulus package is a contractor or gig employees may be eligible to file for unemployment. And so that's something that typically a contract worker has not been eligible for before, but now that may be something that they could apply for. So that is most of the information I have. I went through pretty quick, but if there are any questions, I'd be glad to respond.
We were
Thank
able
you.
to unmute Monica here. She had something to add to something you mentioned, Lisa.
Okay, great.
Sorry, I forgot to mention the one thing that I had number one on my list, which is last night the court enjoined the Dallas paid sick leave ordinance. So it is now on hold until the lawsuit is finished. So just so everybody knows, the Dallas paid sick leave ordinance is it's on hold. So that's good news for some people. I just wanted to throw that out there, and I feel like I should have a breaking news thing across my feed. So thank you.
All right, Lisa,
Great.
we have one question for you. Do people already on unemployment qualify for the $600 per week additional pay?
I believe that if they're on unemployment due to a coronavirus situation, that they would. I don't know when all that timing will happen, but that is something. I think if it's anything involving the coronavirus, that they would be eligible for that additional stimulus money. It's through the stimulus, and it's from the federal government, not the state.
All right. Well, I don't have any other questions, and if we have time at the end, we'll get that through. But we'll move on to Meredith. Thank you, Lisa, so much.
Thank you.
Where did you go? There you are. All right. Wait. Nope.
Much great information covered today. It's overwhelming, the volume of information. So thanks, everyone. I'm Meredith Spurrier. I work for Express Employment Professionals in Garland as the business manager there. And today I'm just going to talk to you briefly about what we're seeing out there in the local market as far as workforce, essential businesses open, businesses that are closed, tips for business owners that have a teleworking presence, you have employees at home for the first time, and just a little bit about embracing technology, which I think we're all doing a great job of here today in the Zoom meeting. So I'll talk a little bit fast just to make sure that I leave time at the end for questions for some of our other panelists as well. So as far as essential companies are going in our local market here, you know, from our perspective, we're really relying upon the companies to identify themselves as essential or not under the stay-at-home order that's been issued. What we're seeing, obviously, are manufacturing companies that have switched their business to creating essential products, essential supplies for the medical industry, or helping out in different ways. I know there's several of those in the Garland area. We're seeing manufacturing companies that create construction materials for commercial properties like HVAC, ducting, et cetera, remaining open at this point with people in their warehouses working. Obviously, you see healthcare. Companies that need delivery drivers that didn't previously need delivery drivers. Now there's an overwhelming demand for product to be delivered to all of our homes. And so we're seeing a huge spike in delivery driving, as well as the infrastructure needed to keep the cities running. So, your trash pickup, your road work and sewage, just everything that requires, somebody to keep everything moving is still happening right now. And we're seeing surges in those companies looking for essential staff. What we're doing with those companies, we're seeing a lot of companies that are issuing, once they identify themselves as essential, they are creating a letter and providing it to their employees, identifying them as essential and performing an essential job function. We know that right now, the police department has stated they are not out with checkpoints pulling people over, asking them to provide proof that they're an essential employee. However, it just provides a little additional level of comfort we're seeing for employees, and we're providing those to our associates as well that are out located with various companies. As far as available workforce goes, if you are an essential business and you are struggling to find a workforce, it is out there. We're seeing a lot of skilled trade workers available. So everything from your welders to your CDL drivers to your forklift. We've got light industrial as far as, loaders and unloaders, janitorial and sanitation workers. There are a lot available now that were with a company that's not essential, that is not classified as essential, that are now looking for work. So the workforce is out there. One untapped resource that we're really seeing is the service industry for a lot of your customer service jobs. People that have been traditionally in the service industry have had a hard time kind of taking a step out of that and getting their foot in the door to give up that daily cash flow that they see come in. Right now, unfortunately, a lot of them are out of work, and we're seeing this as an ideal time to get that talent to work in a long-term career that can help them long after this crisis is over. So there is available workforce out there. If you guys are struggling, please reach out to an expert in the business that can help guide you where to find that. As far as teleworking, I know that that's a brand new thing for a lot of people out there. Some of us have done it off and on for years, but if your business now requires you to have staff at home, a lot of people have not experienced this before. It's overwhelming for them. They don't understand what to work on first, whether to watch Law and Order or to hop on a meeting. So it's important to set your priorities. I know it seems pretty obvious to most of us on the call. Well, obviously, I have work to do. We need to get it done. But really making sure and lay out those priorities and expectations, and having some face-to-face interaction daily with your staff at home is imperative and critical to making sure that they are staying on task and what you need done for your business to succeed is still happening. For those required to still go into the office or into the warehouse, if it's manufacturing, it's imperative that you refer to the health organization and CDC guidelines. We've had an overwhelming amount of questions coming in from our various clients out there saying, what do I do? Somebody called in sick. I want to demand a doctor's note before they return. The CDC has guidelines out there saying, please do not demand doctor's notes from everyone, as the medical industry is strained right now and they may not be able to get that. But please ask them to follow CDC guidelines as far as if you're out sick, have you had a fever? Have you consulted a medical professional? Have you not had a fever for longer than 72 hours without a fever reducing agent like aspirin or Tylenol? So we're encouraging our clients and companies to follow those guidelines and ask the necessary questions out there. I know we're right on the cusp here. So just lastly, embracing technology, making sure that you are utilizing Zoom and Skype. There's a lot of free avenues out there for you. Utilize that. It's forcing us all to adapt quickly, and I think it's much needed. At the end of the day, there's a whole new workforce out there that you couldn't have had access to 2 weeks ago due to unemployment rate. So now's the time to really set your business up to come out on the other side of this even stronger. So I'll wrap it up. Back to you, Andrea.
Thank you, Meredith. We do have one question for you. It says, what kind of help does a self-employed have?
As far as if you're self-employed and you're looking for work, I think is the question. I would certainly encourage you to reach out to your local staffing companies and look on job boards. There's plenty of job boards out there on Facebook. I know that we post on them regularly with available jobs. We're seeing jobs that are permanent, that are not just through this crisis. So I do encourage you to reach out to staffing agency Express Employment Professionals in Garland, or wherever is local to you, and let us see how we can help put you to work. And we've got a lot of connections in the local industries to know what's available and out there, and we're happy to help direct you that way.
All right. Well, okay. Frank said he can make some input on that as well. Frank.
Oh, great.
Yeah, so if you are self-employed, you can take advantage of both the job retention credits that are available and also the PPP loans that are out there and available. So you can go discuss that, of course, with your banker as far as that goes, and then you can also get with your tax advisor and look at the applicability of that employee retention credit as well. Okay, so those are two things that are out there that self-employment people can qualify.
Well, thank you, Frank.
Mhm.
We have another question here. If a company is requiring a doctor's note before returning to work, can the employee file for unemployment claim?
I'll probably have to refer that to potentially legal. Monica, I don't know if you know the answer, or Lisa, if you have the answer for that.
I've unmuted both of you, whoever can answer that question.
I mean, I'll take a stab. If they're requiring a doctor's note, I'm assuming it's because that you're off sick and they need to know if you are fit for duty. Basically, it's a return to work notice. If you can't return to work, I'm not sure if unemployment will be expanded. I think that it's going to depend on the state. Obviously, I'm not sure where Texas comes down on that, if they're going to be very liberal. But I would assume, yes, maybe. It's worth a try to do that. Because, really, honestly, if you can't get a doctor's note to come back, does that mean because you can't work or because you just can't get a doctor's note? Because that's going to be part of the problem going forward. Is they're encouraging employers. On one hand, employers want to make the workplace safe and they want people to say that they have a negative test or something like that. But on the other hand, they don't want to flood the doctor's offices, because right now doctors need to be treating people who have the virus. So I don't know that there's any real clear guidance right now, but I think there's two ways that could come down. So Lisa, I don't know if you have a different opinion.
No, I think you're right. I think that you probably could try to file for unemployment. There is some guidelines if there's a medical condition that you could get unemployment. So again, probably no specific guidance, but that unemployment may be available.
All right. Well, thank you everybody who came. Let's try to do this. Okay. Hi. So thank you everybody who participated today. Oh, wait, we got one more question that came in. If you're working from home, why would you need proof that you won't infect your coworkers? I guess that's, who could potentially answer that?
Well, I mean, I'll jump in on that. I think that the question, the way I interpreted it, was that the employer is saying a doctor's note before returning to a physical location. If you're working from home, then I suppose it wouldn't be as much of an issue. However, if you're not able to work because you're sick, and so therefore you're not actually performing all of your duties, that might be an issue. I think that there's more facts that I would need to know to answer that question.
All right. Thank you, Monica. All right. So any other question that anybody else has? Like I mentioned before, I will be emailing everybody the contact information for a panelist. And if you'd like to reach out to them personally, you are welcome to. Thank you everybody who joined us today. We were recording this, so if you have any other questions, we are welcome to share the link with you all, and you guys can use this as a reference for any other questions that you have. But thank you everybody for joining us. Thank you our panelists, and hope everybody has a great day.
Great. Thank you, Andrea.
Thank you.
Thank you.